Why most AI investors will still fail. Let's be honest. For every person bragging online about making money with AI, there are 10 others quietly losing it all. Most AI investors fail, not because AI isn't real, but because they don't understand what they're actually investing in. They chase headlines. They buy coins and stocks with AI in the name, without ever asking what the company actually does. They're driven by FOMO, not fundamentals. By hype, not homework. AI investing isn't like buying the next iPhone stock. It's like betting on electricity. In the 1800s, everyone knew it was a future, but almost nobody picked the companies that survived. People forget, AI isn't a product. It's an ecosystem, and ecosystems take years to mature. That's why most retail investors jump in at the wrong time, right when hype is peaking and prices are inflated. Then they panic sell when the market corrects, thinking AI was a scam. But the truth? AI didn't fail. Their mindset did, because real investors don't chase hype. They position early, study the foundations, and play the long game. The difference between those who win with AI and those who lose comes down to one thing: strategy. How to avoid these mistakes and invest smarter in AI. Now that we've seen why so many people fail with AI investing, let's talk about how you can avoid those same mistakes and actually make it work for you. First, don't chase hype. Every new AI coin, stock, or startup will sound like the next big thing. But in most cases, the early investors are already way ahead of you, and they're waiting for you to buy in so they can cash out. Instead, look for real utility. Ask yourself one question before investing. Does this AI company or project actually solve a problem? Second, diversify your bets. AI is unpredictable. Some tools will dominate industries, while others disappear overnight. So, never go all in on one AI token, one startup, or one trend. Spread your investment across multiple assets. Think stocks, ETFs, or even index funds that include AI exposure. Third, focus on the long term. AI is not a get-rich-this-month story. It's a build wealth over the next decade story. Those who make the most money with AI are not the loudest ones on social media. They're the quiet ones who invested early, stayed patient, and kept learning. Fourth, stay updated, but don't get overwhelmed. AI news moves fast. Pick one or two trusted finance creators or newsletters that simplify the updates instead of consuming everything that trends. That's how you stay informed without losing your mind. And finally, invest in yourself. AI may replace a lot of jobs, but not the people who understand how to use it. Learn prompt engineering, financial analysis, or data interpretation. Skills that make you money with AI, not just from AI. Because in the end, the best investment is always you. If you made it this far, you're already ahead of 90% of people who blindly follow trends. Now let's wrap this up with what to expect next and how to position yourself for the coming AI investing wave. So, how do you actually position yourself for the next big wave in AI investing? Let's break it down. First, understand the timing. AI is still in its early adoption stage, meaning the biggest opportunities aren't in the flashy products you see every day. They're in the infrastructure, the companies building the tools, chips, and systems that make AI possible. Think of them as the pickaxe sellers in a modern-day gold rush. Second, look for companies that benefit indirectly from AI growth. Cloud computing firms, data storage providers, and cybersecurity companies. All of them stand to gain massively as AI expands. Most investors overlook these silent winners because they're not branded as AI projects. Third, learn to balance innovation with stability. It's tempting to put all your money into the next shiny AI stock or crypto, but smart investors build a strong foundation first. That means using AI-exposed ETFs or index funds to secure steady growth, while experimenting with smaller, riskier bets on the side. Fourth, don't ignore regulation. Governments worldwide are starting to regulate AI development and data usage. This could slow down some projects, but also create new opportunities for companies that comply faster and smarter. And finally, think globally. AI isn't just an American thing anymore. Some of the biggest breakthroughs are coming from Asia, Europe, and Africa. By diversifying across global markets, you increase your chances of catching the next big winner. before the world notices. Because when it comes to AI investing, timing matters. But positioning matters even more. In the next and final chapter, we'll wrap it all up, and I'll show you how to apply everything we've learned into a single practical AI investing strategy. So far, we've talked about the hype, the risks, and how to position yourself for the AI investing wave. Now, let's put all together into a simple, practical AI investing strategy you can start applying today. First, build your foundation. Before you even buy your first AI stock or crypto token, make sure your finances are in order. Set aside at least 3 months of living expenses. Pay off high-interest debt, and automate a small amount of savings each month. A weak financial base destroys even the smartest investment plans. Second, build your AI exposure layer. This is where you allocate a percentage of your portfolio, let's say 10 to 25%, into AI-related assets. Start with diversified exposure. ETFs like Global X Robotics and AI, iShares AI and Big Data, or funds tracking major AI-driven tech companies. These give you stability and growth without excessive risk. Third, add your high-risk, high-reward layer. This includes smaller AI startups, tokens, or early-stage projects with big potential. Never invest money you can't afford to lose here, but treat it like your innovation sandbox. It's where some of your biggest gains may come from if you stay patient and informed. Fourth, keep learning. AI is evolving daily. The investors who win are those who adapt their knowledge faster than the market changes. So read, watch, and learn continuously, just like you're doing right now. And finally, automate your strategy. Set up auto investments, use alerts to track AI trends, and let your portfolio grow with minimal stress. Because the best investors aren't the busiest, they're the most consistent. If you've made it through this video, you already think differently from the average investor. You're not chasing hype, you're building wealth with logic. And that mindset is exactly what will make you stand out in this new era of AI investing. Thanks for watching FinVersed, where we simplify investing, crypto, and wealth building for the modern investor. If you found this helpful, don't forget to hit the subscribe button, drop a comment to share your thoughts, and leave a like so YouTube knows you value this kind of content. Until next time, stay smart, stay strategic, and stay FinVersed.